Hi, today's Sunday the 20th, and this is the end of an eventful week considering that we had the VIX expiration. VIX is in mild backwardation. We had FOMC and then the credible witching on Friday. So, overall, the market has not really reacted that wildly. On this 4-hour time chart, basically a range 32.95, say 3300 to 34.45, or else it's okay, and we're considering current volatility levels. And on Friday, well, the FOMC triggered some selling, then it carried on, but mildly on Thursday, and then on Friday it went down again. Friday close, we were at just above 3300, 3329 on this CFD. The outlook on this 4-hour chart is probably valid for a day or two, and it seems that this 3280 to 3300 support area is still pretty strong. Of course, it could break, and we see that we probably have some support then on 3200 and more likely on 3125. But I suspect that the market will try and sustain this support level for a while now. So unless a surprise, the market should still hover in this lower range. If we look at the current support 3280 and the pivot on 34.45, it should hover still over the same range, maybe with a bearish bias. If we now look at the longer time frame, daily, here we see that these support resistant levels are shifting down again, putting an end to the upside excursion. So it's likely that the market will probably drift lower, and we could see 3200 as a possible objective. We can draw a fib expansion here from the recent highs to these lows and these highs, and so we see a first target on 3280, and I would suspect that this is a stronger support on 3125. So let's see how it goes. We must first see the 3280 to 3300 being broken, possibly penetrated to 3250. It's definitely a downswing, but volatility, as per VIX, has not really shot up, kind of bumped on 28. At this point, I don't see a rapid fall, but of course I could be wrong. Now, lastly, let's have a look on the 1-hour chart. The 1-hour chart also shows this downdraft. Market is basically drifting down. Looks like the 3360 area that was a key level now is now a strong resistance. So the market should actually go back to test this support levels. And of course, this scenario would be review if the market then jumps higher and really breaks that 3360 to 3380 area to aim back on to 3400. But it's not the most likely scenario over the next day or two. Okay, so that's it for now. This is basically continuation of this erosion, although we could have breakout effect if 3280 is broken, and on the upside maybe buyers would get back to try and aim at 3440 again, but first we would need to check the 3360 to 3380 area. Thank you for watching, and bye for now.